Hello, everybody. Chris Martinson here, and today we're going to be talking about finance and economics as part of Finance U. Remember, anything that you see in this video and all resources available at our websites or affiliated websites are not intended as or construed as financial advice. This is for educational purposes. Remember, if you have a financial decision, please consult a financial professional. We are not attorneys, we're not CPAs, we are not financial managers. As well, we do our best to be accurate, and everything we represent is as accurate as we know it to be. Now, let's turn to our program.
So one of the things we have to do that's considered custody over the assets, you have to have surprise random audits on the accounts that you do that. And that's important because it verifies and makes sure that the client's best interests are taken care of. Why can't we as the people, like you said, be able to verify that the Federal Reserve is doing what's in the best interest of the American people versus the best interest of those in their circle of influence?
Hello, everyone. Welcome to another episode of Finance University. I am Chris Martinson, CEO of Peak Financial Investing, back here with Paul Kiker. We're going to discuss all things market. We're going to do it in a way you can understand, and we're going to do it with high integrity because, hey, you matter to us. Paul, good to see you again.
Good to see you, Chris. Lots of things to talk about in the past week have happened.
Wow. I know. So I am, and this is not investment advice, and I have to be very clear, everything we're talking about is educational. But people often ask me, Paul, hey, Chris, how much do you have in gold and silver? Like it's one word. It's not. They're two words, gold and silver, separate words, right? Because they occupy different parts of my thinking, right? One's a monetary metal, the other's an industrial metal. It could have monetary uses again, but let's be clear about its current use. And so they say, hey, how much do you have? And that sounds suspiciously like financial advice. So here's what I will tell people. I am irresponsibly long both. And I have been since the early 2000s. Because that's just how I go. So here we are. I want to talk about gold today and what it means. We can talk about silver too, but gold because it's signaling something. Paul, I've been watching this market ever since I first invested. I remember my first purchase. It was in March of 2001, and I've added to it consistently over time, dollar cost averaging in. So I've been watching this like a hawk. And in the last year, we've seen things happen in the gold market that are off the reservation. They haven't happened before. So this is a change. And I want to talk with you about what these changes might mean because they have implications for everything. The dollar, our portfolios, bonds, everything sort of hinges on this. So let's start there. Has gold caught your attention this week?
Oh, big time. Of course, yeah. Gold's one of my favorite positions. And again, anything I say today is not advice. You've got to do your own research or talk with a financial advisor so we can talk freely about this. But yeah, gold's been on my radar for some time. But quite frankly, we've been at resistance since 2017. We got out of the 2012 resistance and we've struggled, and we kept getting closer and closer. And now we've had this big breakout. Now, Chris, quite frankly, if you'd had told me 3 years ago, said, look, interest rates are going to have an incredible increase in a short period of time. The U.S. dollar is still going to be strong. The economy is holding up well, based on the data that they're giving us, gold's going to break out to all-time highs. I would have bet against that. Quite frankly, I would have bet against it. So every typical signal that's, dollar strong, interest rates high, that's caused the dollar to fall in the past has not mattered at this time. So this breakout is a big, big deal. And, a couple of weeks ago when it broke out, at first I was like, okay, can we hold? Then we held. Are we going to retest? And now we've blown through that 3% level on the breakout. So gold is signaling something major. I can't figure out what it is right now, but it's telling us something is going on under the surface because, you look at the media just in the past week, crypto, Bitcoin, all-time high. Media's, rah, rah, ree, this is great. It's got so far to go. All the reasons why it's going much higher. But then they talk about gold and they're like, oh my gosh, this is the end of the run. There's no way it can be here. They give this illusion, or they talk about it like, don't touch it because you're going to be, buying right at the top, but go chase the cryptocurrency because it keeps going higher. And oh, by the way, we happen to get fees off of that from our advertisers, and gold doesn't necessarily share any fees. So a little cynicism from my standpoint there, but I think it's a big deal. Something's going on under the surface. And the interesting thing is, if you look at the GLD holdings and money flows, this isn't retail. This does not appear to be retail. I've looked at all the data. This appears to be institutions and big money that's making this move, because your normal early morning smackdowns of price just aren't occurring right now.
Now, I got an email from a longtime gold dealer who said that right now they're not experiencing retail buying. In fact, it's 5-to-1 retail selling.
Really?
And this gentleman's been in the business long enough. He was there for those double lines around the block, 1980, $50 silver, all that stuff, right? So he's an old dog, been there, done that. But he said, this is what bull markets look like. Retail isn't in it, big money is, right? And that's how it always happens to be. So let's look at this first. This is a long-term monthly chart of the price of gold. Can you see my little cursor moving around?
I sure can.
Showing up. Yeah.
Sure
so
can.
Here we had, so this back here, this is where I started buying, and I bought through all of this. This was, remember this great collapse of 2008? That was just like, boy, I was gnashing my teeth, because we went from about 1,000, down to whatever that was, 600 and change, right? And then we have this big rise up here into 2011, 12, 13, top, down. And this makes what we call the cup. This is the cup in technical language for anybody who's watching. And then this is the handle, right? And then we had a failure of the handle. We came back up and we were bouncing here, just bumping this 2000 line. And now we're out, right? So this is on a monthly version here. I see a cup and handle with a big breakout. That's a classic technical sort of a position to find, right? But let's look at this again now, where we happen to be, that we are here over 2,300 at the time of this recording here between you and me. And silver's actually started to get in the game too, now over 27. And it's been, let me just show you the weekly on this, because silver's been range bound for a really long time. And we might say it still kind of is. This was, I hate these ads, 2020, the big crater into March, popped back up. And even despite all of the money printing and stocks off to the races and everything, nothing happened. Silver just bounced range bound between 20 and 25, mostly forever. So let's just put it in context. So silver's there, but it has not yet participated even close to what we've been seeing in gold. But I agree with you. This gold breakout means something. So
it means something.
Let's talk about that.
And in addition to that, Chris, so you've spent 6 years in a consolidation phase, working off, that move and building. So the buyers have been steady and the sellers have been steady, so that you've had this battle back and forth, and now you've got the buyers that have won. And that's without the retail. And we've seen what, retail can do to stocks like NVIDIA. The ETF market comes out and offers a 2 times NVIDIA ETF out there, and the only calls I'm getting from your typical, I tend to have groups of clients who are good indication of what's taking place on the fear of missing out and whatnot. And they'll follow our lead, but their initial indication is like, let's go buy. What do you think about this 2-time NVIDIA ETF? I'm like, you got to be kidding me. So when retail's not involved in this, can you imagine what the price velocity to the upside is going to be when retail realizes, hey, maybe we were chasing the wrong thing. And especially that's even without we have some event that gold's preparing for in the background that is not on anybody's radar right now.
What do you think that might be? I mean, we've had all this talk, Paul, about the BRICS, and that's Brazil, Russia, India, China, plus the S. There's a lot of countries in the S now. I think at last count there was over 70. So the BRICS are lining up. They say that, they would like to have an arrangement besides the dollar. They felt like the dollar has been unfairly weaponized, or it's been used in a way that doesn't feel right or fair to them. So they would prefer to have their own system of trading. Obviously very hard to set up a de novo, just stand up a reserve currency. So the talk has been out there for a while that, maybe they stand up a system and there's some gold or full gold backing in that system. What do you make of that talk?
Well, I mean, gold's telling us that there's obviously could be something to it, right? Like price action doesn't necessarily tell us exactly what's going on in the background. But when you hear talk of that, and it makes sense to me, Chris, because quite frankly, if you and I were doing business at the same bank and you said, hey, they got upset about something that I said, I spoke the truth, so they locked down all my accounts and seized some of my assets, and I can't get them until I go to court. Well, oh, by the way, that keeps getting kicked down the road 10 or 15 years. With what we've done in our abusive position of power in the U.S. as the global reserve currency, talking about seizing a sovereign assets to pay for a war against them without due process of law. Unfortunately, we're not trustworthy anymore as a country in having that position of power as the global reserve currency. So, I had somebody make the comment in the ministry that we were supporting years ago, still like to support, but they shared the story with me. When the pain of changing is easier than the pain of staying the same, someone will change, right? Mm-hmm. And people have to reach that rock bottom point. So yeah, the pain of changing and replacing the dollar on the global reserve currency is just an ridiculously complicated web, and it's so embedded across the board. But the reality is, what choice do they have at this point? And if they don't trust each other as much as what the U.S. was trusted until we betrayed that trust, what's the best asset to utilize to back your currency, right? Whether they allow it exchangeable for citizenry or not doesn't matter. But if you have sovereign exchanges, kind of like, and China set the precedent, do business with us and buy our oil and wine, and you can exchange it for gold if you choose to. Just that gives peace of mind to these sovereign entities. And if you look at the recklessness of our budget in the U.S., our fiscal irresponsibility, hey, we're going to be fiscally irresponsible. We're going to tell you that we're fiscally responsible. They're lying on a consistent basis. They're not following the rule of law. And gold is the next best asset that they could exchange between each other. So I don't know if that's the case. But with gold breaking out like this at this point, it leads me to believe that someone or something or somebody has enough information that they're like, I'm not going to wait the dollar cost average into this anymore. Let's go ahead and start making some purchases, even if it moves the price out, because we're either close enough to an announcement of some sort, or they're concerned enough about what's taking place. So I think this breakout is huge. I just wish I knew what it was telling us so you could prepare in other areas.
Yeah.
What do you think? What did you speculate that it's telling us, Chris?
Well, so all right. I agree with all of that, and I'm going to throw this speculation, and I'm going to turn now to a true authority on the subject. And so this is an article by Jan Nieuwenhuis, and I hope I'm pronouncing that close to right. This came out August of 2023, August 25th, and he's talking about an important change unfolding in the gold market, right? The East has been driving up the gold price. Now, I've been talking about this with others for a long time, watching this west to east flood, right? So we sell, the East buys, right? And by we, I'm talking, it's really the London and the New York markets. So you have to understand how those two markets have really locked down the price of gold. I think they've done it for narrative control. They're trying to treat the symptom, not the cause. They don't want the price of gold to send an inappropriate signal to show that maybe people have lost faith in the fiscal prowess of government or its monetary printing by the Fed. So they've locked the price of gold down, but the cost of that has been a severe hemorrhaging of gold from hemisphere to hemisphere. Okay. So with that, he's sort of tracking that through. This was a really important chart. So this is tracking UK. So this is London, the monthly net gold import. So if we're above this zero mark up here, that's a positive net import. And if we're below, that's a negative net import. So gold is coming into London, gold is heading out. Now, this doesn't say where, but look at this relationship. When the price of gold is rising, which is this black line, gold is coming into London, right? It's coming in. As soon as gold's price starts to fall, gold is hemorrhaging out of London again. So some of this just represents the regular arbitrage you get, right? So COMEX is this price for a paper gold, and then, physical gold in London is this price. And so people will buy and sell, and it kind of moves back and forth. A lot of this import export has been just kind of flushing the accounts back and forth as they wang the price of gold around for their management project. So, but here we can see the price of gold is heading down. Gold is leaving London that whole time. And then it pops, this little tiny pop right here. And next thing you know, we have this big import surge right into London. Price comes down. We have this little negative territory, starts to sort of crawl its way back up, mostly positive. Price goes down, negative. Price is going up, very positive gold inflows. And then it pops down here, coming in through that 2022 part we just talked about. And as the price of gold is coming down, again, it's hemorrhaging. And then here, this is the part encircled by Jan. See the price rising strongly here, Paul? It's still leaving.
That's
it's still
actually
heading out. And again, this is a very long-term gold chart. So we're looking at, 15 years of history here. And this last year has been a complete break in that behavior.
Mm-hmm. And that gold, my concern is the gold that's leaving the West and heading east will not come back.
So that last year, Paul, that is such a huge break in the behavior to see the gold price rising this strongly, and the gold is still leaving London, not flooding in. It's actually still hemorrhaging. That's a big deal.
Well, you know what's interesting is the best opportunities are the ones that people aren't paying attention to, right?
Mm-hmm.
The biggest problems, the canaries in the coal mine, are also the things that the market's not paying attention to. The market seems to be ignoring gold. So, and one of the things I like to track, and let me make sure I've got this chart in here, is the premium. So the Gold Trust premium versus discount. So let me share my screen with you so I can show it to you here.
And which is this the big bar premium, like the COMEX premium, or is this coins at the shop? What are we talking about here?
This is just the Sprott physical gold premium discount. So it's easier for me to track
okay,
the indicators here.
Yeah, for the Sprott. They have a fund. They have a gold fund,
so
and they have a silver fund.
And I know it's not perfect, but it does give you some indication. So if you go back and look at, 2021 when we had the nice price spike, if you can see my bar here, I know it needs to be larger.
Yeah, I can.
But we went positive shortly there for a period of time, right after the spike in 2022. But look at the spike that we've had here recently, and we're still at a discount on this Sprott, physical premium and discount. And I know that's not a perfect indicator, but it is an indication of what's taking place out there right now. And the fact that here we had this massive move and gold broken out of resistance that goes back for quite some time. Oh, I hit the wrong button.
That's all right. Saw it.
Goes back for quite some time, and there's still no premium that's in just a sentiment indicator that we can see from a retail side. So yeah, that's something that I've been watching. It's quite interesting. We look for that. Once that spikes positive after a period of time, then you can trim some positions back, take some profits if you need to rebalance other parts of the portfolio. But right now, there's no indication that we need to be taking profits here in the short run, because that breakout with that consolidation that's taken place over many years and just this much of a lack of attention and this much chasing Bitcoin and cryptocurrency leads me to believe that this is going to be a good asset over the years ahead. Not a recommendation to those of you that are out there. You got to do your own research or talk to an advisor. But from my personal perspective and even in our portfolio perspective right now.
Yep. Now, great points. Let me bring this up, which is a continuation of that Jan Uihist article in Gainesville Coins. But this, again, just to speak to how different this is, how big of a change this is. Notice here in this chart, this is two things. In blue, we have the 10-year U.S. TIPS yield. That's Treasury inflation-protected securities, for people who don't know. And it's supposed to track the price of inflation, plus a yield that it's modified by inflation. And of course, gold is an inflation hedge. And as well, as yields go up and down, you have an impact on the dollar or vice versa. So in gold is also the anti-dollar. So what they do is they flip the 10-year yield on the tips, right? So that's an inverted scale on the left hand. Mm-hmm. And then the dollar gold price is on the right-hand scale. And you can see clearly that starting back here in 2006, these things are highly correlated. highly correlated.
Yes.
Very, very, very tightly correlated. Something breaks right here in early 2022. That's a huge change in trend. So we got back to the BRICS, Paul. You know what happened on February 28th, 2022? U.S. Treasury announced that they were freezing Russia's sovereign reserves, proving they were neither sovereign nor reserves. And you mentioned earlier that you can't just go about breaking the rules and changing them on people just because it feels important to you. That's not how contracts work. That's not how business works. Well, you can do it.
Yeah.
But guess what? When people don't want to do business with you over time, that's what this chart is saying to me, is that gold suddenly departed from this long-standing. By the way, I could run this chart back another 20 years, and it looks exactly like that. This is profound. That's what I want to alert everybody to, a real change in trend. And it started when the United States probably did the most ill-advised, stupidest thing I could think of, which was to weaponize the reserves of central banks. In this case, weaponizing it against Russia, saying we're going to seize that because you did something we don't like, leaving aside that maybe it's not all that indistinguishable what Russia did for, like, why is the U.S. in Syria? We're in Syria. They didn't invite us. Nobody wants us there. We're there, and we're squatting on the oil-producing region.
Yeah.
Anybody ever write articles about where all those oil monies are going? Because oil's coming out of the ground.
Yeah.
Nobody ever talks about that part, right? So anyway, I'm just glass houses, stones, usual story, right?
Yes.
But we did that, and then we didn't back down. We didn't think about it for a month and go, oh yeah, we were kind of drunk and not thinking clear. We're sorry. No, we're persisting with that idea that we can weaponize those things. So all of a sudden, what do you do? What do you do if you're China and you're sitting on $1 trillion of U.S. treasuries? You start thinking that through. You start stroking your chin, you know.
Well, what I would do personally is I would recycle those U.S. dollars into productive farmland in the United States. I would recycle it into building manufacturing bases inside the United States, and I would start accumulating gold and preparing myself to be, independent and build a mirror system that you could replace at any point in the future. And what I wonder is if in the future, because we won't know for a period of time, right? We've got road markers that we're going through now, but they're not as clear as driving down the road. Are we going to look back and say that's the moment that the pain of changing became easier than the pain of staying the same? Because you can disagree with someone, but if you still respect them, then you can still have a relationship, right? But if someone hasn't earned that respect because they lie, they cheat, they steal, and they operate like a third world country and seize assets without the rule of law, then now you're no different than any other third world country. So you're going to have to take over the reins or take over that position yourself and build a better system.
Yeah. If you want to have the world's reserve currency, you have to, there's a set of rules that go along with that, right? You can't be that and capricious and arbitrary and fickle, right? You've got to pick one, right? So that's the issue. So this is a really big change. And so the thing I want to alert people to at this point in time is that this is profound. I don't know everything about what it means yet, Paul, but I have worries that it's going to be, we're starting to see weakness in the U.S. Treasury markets, right? We're starting to see that inflation is actually structurally part of the game right now. It's not going away like we thought. We know that we're lying about inflation anyway. Whatever it is, just double it and you're far closer to the truth than whatever is reported by the government. So that's true in Europe, here in the US as well. So that's what we're up against right now. And so the concern I have is that eventually you sell enough of those treasuries out there, things are going to get tough on the funding cycle. And so let's pull back to one more piece in this story, which is not that. It's energy. We got to talk about energy real quick here.
Oh yeah, energy market was down, energy was up yesterday.
Yeah. Well, they're working pretty hard to keep energy contained in the U.S. That we know that Biden is the first president in my lifetime that's day traded the price of gasoline. Right? They sold the SPR. That's our strategic petroleum reserve. That's like, what'd you do with your rainy day fund? Oh, I gambled it.
Yeah.
I put it all on red. It's just, come on. Anyhow, this is a big deal because this is the price of oil. So here we're looking not at the international, which is Brent. This is WTI, West Texas Intermediate. And you can see here from back here in March where it was at 80, right? It's just been a pretty relentless rise. We got things going on in the Middle East. There's supply issues. Stuff is going on. But that's just in the past week or so, a little over a week. We've seen that. We come back even further and we see that it's gone from about 67 here to 85. So that's about a 30% rise in the price of oil. Now, Luke Groman really cued me into this, Paul, which is he said, look, if you're one of these countries that's holding dollars and you also have to import oil, the more the price of oil goes up, the more you're going to just at some point go, I guess I need dollars because I use dollars to buy oil. My dollars are in treasuries. So he said, as you watch the price of oil go up, you're probably going to see more and more pressure on treasury yields just because, just like somebody who's tapped out at home and can't afford the rent payment, you sell what you got to start participating. So the price of oil is also something that I've been saying for a long time. People, you got to watch this. And that's exclusive of any craziness that might get kicked off in a Middle East conflagration. That's different, Oh, that's a plus in this story.
That would be the death now. You know what's interesting, and the 10-year recently broke out. The 10-year Treasury yield has broken out. I mean, you've had a rise in yields across the board, but the outlier based on what I'm looking at is the 10-year. I'll share the screen here so you can see it. Has broken out above the highest level compared to the others, going back to November, December last year. Now, it's nowhere near as high as it was back in 2023 when we got up to 4.9. But this is a breakout right here compared to other areas. This is the 5-year. It's not broken out of that high. You've got the 2-year that's in here. So, we're starting to see a little bit of indication of that, of what he's talking about there with oil prices going up and yields on the 10-year going up, because that 10-year is a very important rate. It's a very important rate to watch. That's interesting. Yeah.
So another way, if we wanted to look at it this way, is, oil and gold and treasuries are all telling us that the expectations in the market have changed towards the switch is flipped towards inflation. So this then would be almost a perfect repeat of the 1970s. Remember, we had a burst of inflation. It started to come back down. They had to whip inflation. Now we're winning. And then, it really got bad. So maybe there's an inflation cycle that, we're just in the midst of. That's how it works. But also this time, Paul, we got to be honest about this. That thing where the Federal Reserve printed $4.5 trillion because of COVID. Ooh, that's a self-inflicted wound. We're going to be living with that one for a while.
For quite some time. And going back to 1973, what's interesting is the market stretched out to new highs in 73, and everything looked good, and then inflation surged back, and you had a 57% decline, 47 or 57, I can't remember, somewhere in the neighborhood of 50%, just to be as general as I can be, in the market, which caught a lot of investors off guard. That ended the Nifty 50 kind of craze that was taking place. And then it was years later before investors actually really understood how the opportunity that was in the market, from that point forward. So that's not outside the realm of possibility here. So this is one of the things I've really been looking at is just trying to watch indicators, trying to listen to what price action is telling us, just trying to look, because you've got a lot of certainty with investors out there. They are behaving like they know for sure that the Fed's going to bail us out, right? So there's a couple questions that I have to ask myself. My thesis has always been, we're going to have the event, could be like 73, 74, if worst case scenario unfolds where the market goes down 30 or 40 or 50%. And then they come back in and say, hey, we bailed it out during COVID with printing money. Let's just do 10 times that. And their arrogance to expect the rest of the world is just going to tolerate it or to be forced to tolerate it. And then you have a currency crisis. So that's kind of been my working theory. But then with all these, gold breaking out, and you've got oil prices breaking out, and you've got other assets that are breaking out. Commodities are starting to break out at this point in time again, with near panic moves in the short run. When you go back and look in a shorter period of time, it's like, okay, well, I don't want to be stuck in this thesis. What if these are the early signs of a currency crisis already? What if we're already in the early signs of a, you know, not necessarily a hyperinflationary event, but leading to that? And what if that market decline is behind us? Now, that doesn't mean that your NVIDIAs are going to continue to run at the pace that they are right now. I mean, that thing has so much momentum that it's a fool's errand to try to determine where the peak is going to be. I think we're going to look back in the past and there's going to be a lot of regrets from investors that have been chasing it. But there are other asset classes that are far better to own than some of these large cap stocks if we have that type of event. You've got your commodities across the board. I mean, cattle prices have broken out to all-time, live cattle futures have broken out to all-time highs again. So, the markets are telling us something, but the king of those commodities and the king of the safety trade and the inflation trade, who is gold, is telling us something major is going on under the surface. And it doesn't appear to be a false move, because we have clearly broken through that resistance level. We have cleared that substantially and above the 2,300 price level now. And nobody's paying attention. I mean, we are, because this is the world that we pay attention to, and it's on our radar across the board, but your average retail individual is just ignoring it at this point.
I agree. And so this is an important reframing. I think we're getting to this stage of the story where people have to stop looking at the absolute numbers, and you got to start looking at relative numbers. So what do I mean by that? A lot of people say, oh, the dollar, the dollar. Well, when you say the dollar, you're just comparing it against the euro, the Japanese yen, the British pound, which we see on the screen right now, et cetera, right? And look at this, nothing's happened. This is kind of where it was. It's going to go up and down. You know what? Each one of these is a skydiver falling at a different rate. So I don't care about what the dollar is doing relative to other fiat currencies at this stage. So if you said, oh, the dollar's still strong, everything's fine, I'm like, well, no, that's just measuring it against the euro. Yeah. How's the dollar doing against copper, wheat, oil, land, cars, healthcare? How's it doing against the things that you actually have to spend it on? And the answer is, oh my gosh, today, compared to when gold was $1,800, it's down like 28%. My dollar has lost 28% of its value relative to gold. So that's part one. It's just the relative measured against real things. And the second is people like, oh, I bought 50,000 of gold, but now it's worth 60. No, 45. Like, how many ounces do you have? That's the right question.
Yeah, that's the right question. And continue to average in a little bit. That's the safest way to increase your exposure and to gain exposure to something as time goes along. I don't know how true this is, but I've got an acquaintance that's in the institutional money management space. And I'm like, I ask questions all the time. I'm like, why with what we're taking place, and this individual believes in gold from a long-term standpoint, like, why are you not allocating to that from an institutional point of view? He said, well, everything has been driven by momentum. He said, so we need a 3-year look back before we really start chasing as far as allocating resources there, because, all the data shows something carries momentum for 3 years. It tends to carry it for a little bit longer than that. And he says, gold's just not had enough momentum in any metrics that we use to demand an asset allocation. He says, we may do it as a special idea in there, but he said, basically all of the mutual fund space and, typical Wall Street money out there is going to be that kind of momentum chaser herd mentality. So based on that explanation, if that is representative of what's taking place on Wall Street and institutional money, we're still probably at least 12 to 24 months away before they start chasing it. So this breakout could really be the bleeding edge of a major bull market that's going to reward those that are involved. And especially, if you're like me, it's like I look at it and I'm like, okay, when's the SmackDown coming? Right. It's like, I don't want to get my hopes up. It looks good here.
Yeah.
But, if I remove that, just my own, personal feelings, and I look at the data, this breakout's big. This is big, and it has legs apparently. Now I don't know what's going to happen here in the short run or how long it's going to last, but it is something that continues to be an important piece in the portfolio of those who've had good advice to help them get there. I think I said it that way without it coming across as advice. Talk to your advisors, right? Because I can't
Yeah.
make this blanket advice across the board.
Well, I'm wondering if we aren't at that part of the story, Paul, where that I've been waiting on for like 20 years, right? And it's been far too long of a wait. I'm really annoyed that we have people in positions of authority who are busy manipulating markets because it's never a good time to have a crisis. And we want people to think the right things, not the wrong things. We wouldn't have people to get dollar hesitancy, you know.
Right.
So they do all their stuff instead of just saying, wow, why don't we just let natural signals be your scorecard? And if you don't like the scorecard, change what you're doing. Stop printing, stop bailing out Wall Street, stop throwing taxpayer money into boondoggles. Stop it, you know? And so we haven't had that corrective measure for a long time. And I always thought that corrective measure was going to have to be some outside force, like a 3-year-old throwing a tantrum. Somebody's going to have to, like, you know, step in who's an adult. In this case, you know what's the hardest thing to find out is how much gold does the West actually have? I am a super sleuth, Paul. I am a great researcher, and I know other people who are even better researchers in this space, and we all just shrug and go, who knows? No audits performed on the U.S.'s gold in Fort Knox. We don't know how much is in various vaults. It's super secret, but don't worry, it's a barbarous relic, Chris. Nobody really cares about it. We're just going to not have any transparency into the space. You know, you can't have both those things. So I've always been suspicious. So here's a little thing. I know a guy who runs a big refinery in Switzerland, and two things. He says, first, they have a sign over the receiving door that if you see any of these state mint marks from China, you get a reward. So anybody who's on the loading docks pulling gold in for refining, because so no gold ever leaves China. Nobody's found one. Like there's no mint marks. Like when gold is manufactured in China and gets a mint mark on it,
it's
the last time.
It's so rare they incentivize their employees to look for them.
Yep.
That's impressive.
Yep. And he said they have this tattered sign that's been up for years. Nobody's ever found one, right? So they were just, they're keeping an eye out, because if suddenly a bunch of Chinese state mint marks showing up, you got an idea, right? The second thing is that the quality of the bars they are getting out of London, they have bar numbers on them and they've been tracking them. And he said, we're hitting the bottom of somebody's vaults. We're hitting mint marks that were poured in the 50s and 60s, right? And some of this stuff is kind of substandard. This isn't 3.9s gold. This is like 0.925, whatever. It's like,
Wow.
You know, it's stuff, right? You can clearly see like where they poured bars, where they just sort of melted down some other stuff in a haste. And so we're down to the dusty crevices of some vaults, right? So the idea here I'm getting to, and I will get there eventually, is that the West will run out of gold for this little enterprise of running its little narrative machine, of pretending like the price of gold is low, to pretend like the price of gold approves of Western decisions, right? I think we're getting to the end of that story. And that's why I showed that it's really weird to have the price of gold going up in London to still be hemorrhaging gold. I think someday we run out. Someday we admit it's not a barbarous relic and we've committed too much to this project of suppressing the price. China's bought it all. They called our bluff, and they're going to have to say we can't sell anymore. And then the question for you is, what happens then? Do you think the price just rises because that's what should happen, or does the West pass laws against you and me owning gold again? Where do you think they go with that?
Well, one, the price is going to rise dramatically if that's the case, but I'm concerned about capital controls if that takes place. My concern is, hey, we're going to lock you into the system. You're not going to be able to move money overseas. And I haven't thought about this in a long time.
Me neither.
I haven't thought about the capital controls in a long time until you mentioned that, but I could be wrong on this, but there was somewhere, it was a pretty big deal back in 2012 or 2013. It was a silent banking system kind of infrastructure build that they could limit you to $3,000 a day. Do you remember anything about that, Chris, as far as transfers?
Bells are ringing, but not enough to opine.
Let's just assume that I'm completely off on that because I've not thought of it in years, but I would not be surprised at all to limit, because from that standpoint, Chris, what's this government that's indebted in a foolish and ridiculous, evil, sinful way, in my opinion, just call it like it is. It is so ridiculously foolish. So if if that event happens and investors start chasing gold, what are they going to be selling? If the rest of the world's selling the treasuries, U.S. investors aren't just going to blindly continue to hold treasuries. They're going to chase. So the only way they're going to be able to at least limit the hemorrhaging is capital controls and limitation on how you can move your funds. So my concern has been for a long time. And one of the reasons why I'm a strong advocate of people that we meet, first, if they have an emergency fund to get through, and make sure that's why we do the financial plan or analysis on them, is to make sure they have some assets that they can allocate from a long-term insurance standpoint, inflationary insurance, chaos insurance, to some gold that when you purchase it, if it's 5-10%, I like 10% of your liquid assets. Now, you got $10 million in land. You don't necessarily need 10% of gold in that land. That land can be a good asset, especially if it's got resources, farmland, timber, commodities that we can use on it. But 10%, and no different than the fire insurance you have on your home. Okay, because if you're an individual that has that, and let's say your broker dealer that you're working with is like, hey, we're not even going to let you buy gold here, or if you do, your advisor is not going to be compensated. So they set the incentives up to where nobody buys gold through them. And quite frankly, as bad as I hate to say it, I really believe it has to do with the fact that there's very little fees that can be charged and revenue shared on gold with those big institutions. They look at it, you got all these new Bitcoin products, you've got fees that are in there and they can share those fees. It generates revenue. I know gold ETF have fees in there too, but it's not quite as profitable as some of the others. But you buy that, you set your mind that, hey, this is something I'm setting, no different than fire insurance on my home. I'm going to set it aside. I'm going to hope 10 years from now that it's the same price as it is today. But if that event that you're talking about there, Chris, unfolds, even if you haven't invested into it relatively heavy, or if you've got an advisor like us who has tools that can overweight precious metals and commodities in your portfolio, you're going to be better off than what I would assume right now. I don't know the data on how many people have gold, but they are far and few between out there. You're going to be better protected than the average individual. So even if you just look at it as insurance from a long-term standpoint, there's something going on behind the scenes right now that we'll find out in time. There are people that know. And my question is, are those people that know, allocating towards gold and giving up on waiting for pullbacks? So I do think that it's possible that they'll implement capital controls at some point in the future. And that's why it's important to make those decisions now ahead of time before that event comes. I hope it doesn't happen. I really hope it doesn't. We need free markets. But I don't see how those that are in power right now, they're so willing to make foolish decisions, lie, and cover their own sins, per se, that they're going to just wake up one day and go, hey, I'm going to admit. I don't think they've listened to Jordan Peterson talk about the importance of the truth and the journey you follow after that, because, they're trying to slaughter him in every way they can. So I just don't see that event coming. I think they'll run the system into the ground before they would admit their evil deeds behind closed doors.
I agree. I that's how I analyze it. I ran across, there's a number of charts that people like, oh, Chris, you're much too conspiratorial. You think the markets are rigged. I'm like, I don't think it. I know it. Yeah. And I can show you that if you bought starting from 1993, when they started futures trading in the U.S. stock markets, if you had bought the cash open and sold the cash open, so the U.S. stock markets open at 9:30, they close at 4. So if you bought and sold, so you just held it when they say, oh, investors this, investors that, you think about the stock market and people and papers and freight jackets and screens. If you had bought and sold, you were up 25% over the past 30 years. But if you had bought the overnight market where the futures are traded, right? You were up 1,200%. All the action was already done. It happened in the overnight when there's no humans involved. Mostly it's just computers trading futures. And that's where I think you watch, they set the price, right? So same story for the past 20 years, Paul. If you bought silver during the open of the U.S. Open here, when prices are set in the U.S. COMEX paper markets, if you bought silver at the beginning of the day, sold it at the end of the U.S. trading day, your silver over the past 20 years is worth 13 cents an ounce. However, that's what it traded down to over that whole time. However, if you bought it as soon as the markets closed in the U.S., held it overnight and sold right before they opened again, So you're holding it when the rest of the world is doing it, engaging with it. Silver is worth $373 an ounce.
Wow.
So I can tell you very simply, the rest of the world buys and the U.S. sells. That's what we've been doing. And I'll tell you why we do it, because somebody makes money doing it. And they've done it long enough that it's just what they do and they make money. And no regulator has stepped in and said, that's not a market, because the regulator is from the government. The government likes that behavior. If those people were manipulating those prices the other direction and at driving the price of gold and silver up, oh my gosh, SEC, CFTC, Senate investigations, DOJ, they'd be all over that. But because they're doing it in the right direction, here we are. So I know that sounds like, that's terrible. I love buying subsidized silver and gold. That's what I've been doing this whole time. I'm like, yeah.
Yes. But you know, it takes patience. It takes an understanding of the reason why you're doing it. And it's hard for investors to do that, because I don't watch CNBC. I don't watch the major mainstream media. So, I mean, I hear what people are talking about, and every now and then I'll take a look just to say, are they really saying what they're saying? But the reality is, it's just patience, paying attention, and discipline from a long-term standpoint. And, you know, I believe that when we get in the future, we're going to look back and people are going to go, wow, you know, I missed a great opportunity to be averaging into and taking some of my revenue and purchasing into that volatility of prices go along. Because I think once that train leaves the station, and I could argue that the train has left the station now, but there's still time to get on for those that's appropriate for their situation. You're just going to have to run a little to catch it. You know, it's not coming back, right? You know, I mean, when you have this big of an area of consolidation, this much money printing, and this many things that are coming apart around the world, deglobalization, there's one asset that you can verify the trust, right? It's been the most trusted asset throughout history until another system emerges that can verify trust, that has all of the background workings under the light for everybody to see, instead of in a back corner hidden in the dark.
Yeah. And trust is so people say money has three qualities, right? It has to be a store of value, a medium of account, right? And medium of exchange, and a unit of account. Sorry, mangled that last part. But yeah, there's a fourth it has to have, and that's trust. Right? Because they always leave that last part out. I don't know why they always say it has these three characteristics. No, it has to have the trust. Because as soon as, like when the U.S. during Revolutionary War times, they went off of the gold and silver standard, mostly a silver standard, right? And decided to start printing script, they called it, right? You know, and they printed that, part of that was Continentals, right? Not worth a Continental was a saying for generations, because it was just, it went the way of all paper money, right? People didn't trust it. And how could they? Somebody could just make up as much as they wanted. And the British were counterfeiting it to undermine the society. And that's why I have a complaint about the Federal Reserve, because when you undermine a society by printing currency, you are a traitor to that country. You're at war with that country. So don't undermine your currency, right? But leaving that aside, we have to trust. And that's what you and I have been sort of nipping around the edges of this whole time, is that people have lost trust. And I think for good reason, because the Federal Reserve has not behaved in a trustworthy manner. They won't let us audit them. What do you mean won't let us? You're a public institution. We've entrusted you with the most important thing possible. And I want to know, at a transaction level detail, who you sending money to. Is it your Uncle Bob? Is it some weird Cayman outfit that's then suddenly a huge purchaser of treasuries? So it's a stealth monetization of national debt? I deserve to know, because this is going to impact my children's inflation and financial and monetary futures.
Yes, it is. Well, and I would argue that if Bernie Madoff had the power to be able to keep from being audited, he would still be the best performing asset manager on Wall Street and be paraded around as, you know, the best. So it's ridiculous that we don't have the ability to audit them, because then you get to really know what's going on behind the surface. You know, and kind of going back to the great taking thing, one of the things we've been exploring is how can we help people deal directly in Treasury Direct, right? So one of the things we have to do that's considered custody over the assets, you have to have surprise random audits on the accounts that you do that. And that's important because it verifies and makes sure that the client's best interests are taken care of. Why can't we as the people, like you said, be able to verify that the Federal Reserve is doing what's in the best interest of the American people versus the best interest of those in their circle of influence?
Yep. And thank you for bringing up the great taking again. I'm almost done with the series. So if anybody hasn't watched that yet, it's at peak.prosperity.com, my sister website. And it's also on YouTube and all that. So the great taking, really important. It's a set of legal rules that have been stood up, and it's all around the fact that our stocks and bonds and most financial assets are held in what's called indirect ownership model. It has some pros and cons. You should probably know about the cons. And so, Paul, we're going to be having in about a month and a half, we're going to have a webinar which just talks about exactly what people can do and what maybe you can't do to respond to the rules as they've been written. What are they? I'm shocked at the lack of fiduciary responsibility in communicating those. Mm-hmm. I've got brokerage accounts. Nobody ever told me any of this stuff, right? You know, I went through the terms of service agreement on a whole giant on a brokerage account, 54 pages. They didn't detail any of this stuff.
No.
I'm like,
I still remember the first time I read the book. I was like, I just sat it down, put my hand on my head, and I was like, I can't believe this. Like, I've been in the industry this long, and nobody has ever mentioned this before. Mm-hmm. And for you listeners out there, if you have not gone through Chris's series up to this point, you've got 8 now, right? You just finished with SIPC. Yep. You've got to go out. It is worth your time to listen to it. It's information. We don't have all the answers yet. We got a few, but you need to take the time to go listen to it. It's not necessarily going to be fun, but it's information you need to know about, because if these triggers are pulled, you don't have to have everything protected, but if you have something protected, you're going to be better off than the average individual.
Yep, absolutely. Absolutely indeed. So, well, I see we're up on our time here, Paul. So I just want to remind everybody that if you would like to talk to Paul and his amazing team at Kiker Wealth Management, just come on by peakfinancialinvesting.com, a very simple form. Email gets kicked out. You'll be notified. Paul, I understand you've been very busy of late, talking with people who share our outlooks and concerns. And so thank you for doing that. And thank you for helping people. And it's just been nothing but A1, plus feedback so far. So thank you for doing what you're doing.
Thank you. It's my honor. And I tell you what, I have thoroughly enjoyed meeting, and I've said this before, and I'll say it again, some of the most intelligent, courageous, truth-loving, and truth-seeking people that are out there. And, it's given me such a hope that yes, we have a small remnant of individuals inside the United States, and not necessarily small. I don't mean small. I'm just talking about in relation to the overall population that care about doing what's right, that care about integrity, and they realize that the path that we're heading down right now is unsustainable, and they're looking for individuals that can help them. And it's just been such an honor to meet people and help show them that where they are, talk about ways to prepare and have those conversations across the board. It's really fun when I can get somebody that has enough resources we can go through. It doesn't matter if they don't, but we help people get where they are, but then there's individuals that can really expand their diversification of protection because, so it's an honor. It's an honor to meet people.
Well, thank you. It's such an honor to be in business relationship with you around this. And as we mentioned, as we talked about in last week's episode, it's not just you and I saying this is unsustainable anymore. It's now the U.S. Treasury Department telling us that the United States is on an absolutely unsustainable fiscal trajectory, which is a euphemism for careening towards a brick wall. And I think once you're notified about that, you have to do something about it, because in this day and age, Paul, no decision is a decision. And I know it's tough, but people do have to look at square on and just say, I wish it didn't have to be this way, but it is. So now what do we do? And so thank you for helping people figure out those answers to those thorny questions.
It's my pleasure.
Hello, Chris Martinson. I'm the CEO of Peak Prosperity and also Peak Financial Investing. And after watching that, you're probably wondering, well, what do I do with my money? Look, you both deserve and need somebody who can talk to you about what's really going on in this world, understand the situation as it is, not be steering you towards certain things that don't make sense for you, or just keep you in a game that's already ended. Look, if you want to talk to somebody about the petrodollar declining, or what is happening with gold, or which sectors are actually the best ones to be in, given what the Federal Reserve is up to or the federal government, you deserve to talk to somebody who can answer those and has a few gray hairs and has been there through some of the economic cycles, because, hey, we're in another economic cycle, so it's good to have that experience. Fortunately, at Peak Financial Investing, what we do is we go out and we scour and we look for the very best firms out there who satisfy one thing above all else. They've got great experience coupled to great customer service. So if you want to come by peakfinancialinvesting.com, there's a very simple form you can fill out, just a few fields. You hit send. What happens is an email gets triggered out. It goes to an endorsed firm of ours. You will get an email back. You can then set up a phone call for a 30 to 45-minute free, no obligation, no pressure call to find out if this firm is a good fit for you, and to find out if you're a good fit for the firm. It has to go both ways. And if all that matches up, this will be one of the best things that could happen to you this year. So please come by peakfinancialinvesting.com. Very simple process. We would love to help you if we can. Thanks very much.